I'm pleased to welcome Richard Carleton, the CEO of the CSE, once again to SmallCapPower. Richard, thank you for joining me.
My pleasure, thank you.
So I understand that you have a passion for millennial investors. Why is that?
As we travel around the country, talking to companies that are looking to raise money from the public equity markets, what we see is a situation that has changed dramatically from maybe 15, 20 years ago. It's very difficult now for individuals to purchase stocks, especially during the fundraising stage, in these kind of early stage growth stories. Most of the money now is coming from the exempt market, and when it comes to individual investors, that means you have to be an accredited investor in order to qualify for investment in these companies. And we know that there's a lot of passion for entrepreneurial stories amongst investors and people of all ages. The problem is that the accredited investors skew older and obviously substantially wealthier than the broader population. And so we'd like to see the accredited market expanded quite dramatically so that it's not just the 1%, because that's actually about the percentage of Canadian households who do qualify as accredited investors that are able to invest in these early stage companies.
And you mentioned to me earlier that what we see at these conferences are a lot of new technologies that the next generation should hear of. So what kind of initiatives is the CSE doing for younger generations to learn about it?
Well, we're certainly participating in lots of different shows and giving our companies that are listed with us an opportunity to tell their stories to a broad audience. But we're going to have to make some very fundamental changes to securities legislation across Canada in order to, say, broaden the definition of accredited investors and to provide exemptions for individuals to, in fact, invest directly in these stories. We think it's kind of unfortunate when we look at some of the big successful IPOs. I mean, everybody knows about Facebook, went public 2-3 years ago. The problem is a very, very small number of people made money. Unlike the days in the 70s and 80s when Microsoft, Intel, Cisco, and Apple went public, everybody could buy those stocks, and everybody that was a patient investor made money. It's just not the case anymore, and we need to change that.
What kinds of advice do you have for young investors?
Do your homework. You know, it is very sound advice that in investing in any market, it really does pay to do your homework. When we talk to private investors that work with a lot of early stage companies, the joke is that they invest in the jockeys and not the horses, meaning that they're looking for expertise at the management level that's capable of executing on the business plan that the company has presented. There's so much information available about people's past track record, with companies. You can, in fact, choose or pick, the jockeys who do, in fact, have a successful track record. That's a very good indicator of success because, let's be honest, as with all early stage business, there are a lot of risks. And the failure rate of these businesses can be quite high. So again, the well-informed investor is often the best investor.
Very good. Now, I'm curious about the companies that are listed on the CSE. What, in your personal view, makes a company top quality?
Well, certainly you'd like to see a company that has its stock widely distributed so that there's a whole series of different kinds of investors, institutional folks, PE folks, retail investors, that may be spread geographically around Canada, the United States, Asia, Europe. That's obvious. Having that strong capital base means that, in fact, the stock can be quite liquid when it's trading in the secondary market. The companies that list on us represent the companies that are being funded from the investment community at a given time, so it does tend to be kind of cyclical, so that at the moment technology companies are very popular. There will be a time again when gold exploration and oil and gas exploration companies are popular again. It really depends on what sort of companies investors are supporting at a given moment.
And that actually touches upon your successes with record liquidity. Can you give us comments on that?
We've had our best week in the history of the exchange the week before last. And we had several days of record trading, share turnover, and value traded, which is obviously very gratifying. I spoke to the group here just a few minutes ago and mentioned that we're already in annual record share turnover territory, and we'll shortly go over the billion share traded mark on the year. And I think that's a function of us appealing to the retail investment community in particular. And we're very nicely concentrated in some spaces that people are interested in at the moment, and the share trading numbers are reflecting that.
Well, Richard, thank you for joining us on Small Cap Power.
My pleasure, thank you.
To keep up with the CSE, follow them on Twitter at CSE_news. I'm Rachel Lee for Small Cap Power.